Is the sheer existence of a home loan and a mortgage to blame for the absolute crazy skyrocketing prices we've seen in housing since their inception? It's a topic that I've wanted to discuss for a really long time, and I'm going to dive into it today. Welcome back to my channel. My name is Reese, and in today's video, I'm going to be talking about who the real winner is between banks and home buyers when a person or a couple decide to purchase property with a mortgage. There are historical references which date all the way back to the 1700s for the existence of mortgages, but it wasn't until the early 1900s that they started to be widely adopted. Before mortgages were a thing, if people wanted to purchase property but didn't have the cash up front ready to go, they were pretty much out of luck. So whoever had the bright idea to introduce the concept to give that person the money up front so they could buy a place of their own, have a roof over their head and feel secure about it, and then pay that loan back later must have been frothing at the mouth. Back then, that kind of idea would have sounded incredibly risky. To have someone pay back a sizable loan over a very long period of time was a commitment. And it wasn't ideal for buyers either. There were lots of unfavorable terms for borrowers. One example would be the payback period, where back then, the loan needed to be paid back in a much shorter time compared to what we see today. Regardless, the introduction of mortgages injected a shit ton of new buyers into the market because people wanted to own their own homes. They wanted a roof over their head and they were willing to pay it off gradually for a price. Fast forward all the way to today, where mortgages play a key role in the majority of property purchases. I would say that in this day and age, almost every single first home buyer would have a mortgage in some way, shape, or form, unless they were fortunate enough to have very rich parents or have won the lottery. And it's very interesting looking at the product being a mortgage and how it's been developed and slowly optimized by banks to increase and maximize the profits they can make on those mortgages. We see this in the form of prolonged payback periods, such as the 30-year mortgage, which increases the period of time that interest is paid on the loan. There is a whole swag of fees that come with mortgages and home loans, such as account fees, annual fees, setup fees, refinancing fees. There is so many, I can't list them all, but they're just a few quick examples off the top of my head. And the most obvious revenue generator, which I kind of just mentioned, interest. Now, since the early 2000s, lending in general went crazy, and in the worst kind of way possible. Regulation existed, but it wasn't thoroughly in place. Everyday citizens fell into the traps of banks and irresponsible lending, where lack of regulations caused a domino effect on these buyers, where they started getting caught out unable to repay their debts, which ultimately led to the 2008 global financial crisis. If you haven't seen it, I highly recommend watching The Big Short, which is a movie that goes into great detail about this topic. I've also made a video talking about the GFC, so if you were interested in learning more about it, feel free to check that video out after this one. I've left it down in the description below. And while you're down there, do me a massive favor, tap that like and subscribe button. It really does go a long way for the channel, and I really do appreciate the support. Okay, so now moving towards the main question that I wanted to address. Do I think the inception of the mortgage played a role in the increase in value of property prices worldwide? Simply put, yes, I do. If there are enough buyers, someone will always pay more if they want it badly enough. Think about it like this. Before the mortgage existed, if someone wanted to own property, own their own home, they would need to have the full amount ready to go up front in order to be able to make that purchase. This limited the number of available buyers and also kept those buyers in check. In some way, shape, or form, essentially they were only going to be able to make a purchase price based on what they had available to spend in that very moment. And the effect of this would have meant that house prices would not have risen in price too significantly too quickly. Key point here, too quickly. I say this because if you really think about it, a bank who gives out a mortgage in some circumstances will lend a buyer up to 95% of what they need to go out and purchase a property. They can borrow nearly 20 times more than what their initial deposit's going to be. This is a recipe for disaster because it not only promotes the buyer to leverage themselves to the max, which would be considered relatively irresponsible, it also puts them in a very tough position, especially especially at the very beginning of that mortgage's existence, because if something were to occur where they were no longer able to make those repayments, they're going to lose that house. Examples of these types of occurrences could be interest rates rising too quickly, or them losing their job without having the buffer of a built-up emergency fund ready to go for a rainy day. These things are the types of things that did happen back in the 2008 global financial crisis, which saw millions of people worldwide losing their homes. The bank doesn't care about these issues whatsoever. All they care about is that you pay. They would happily lend you 100% of the value of a property if they could, because that would mean you would be stuck paying interest and those fees for much longer, and that means more money in their pockets at the end of the day. Ultimately, the house is going to hold its value for the most part, where they really can't lose here. Banks are also able to absorb the losses from small amounts of people defaulting on their loans, like in small doses, because they have plenty of revenue coming in from other income sources, and we'll call them good mortgages, where people pay their mortgage on time consistently, and that interest is just them making extra money to cover any losses that they have to cover and then also make profits. These banks and lenders are also insured for their losses, so they're going to get that money back no matter what. And to top it off, at the end of the day, the taxpayer is going to be the one who bails them out, like they have multiple times over the past century. This is not an uncommon thing anymore. It has happened so many times. So much money has gone into those financial institutions and systems to make sure they stay afloat and don't cripple our entire economy to the point where it's unrecoverable. It has been frightening watching the value of property in Australia alone skyrocket because the government has consistently made it easier for banks to lend money and people who are FOMOing into the market who have been fueling this jet. I want you to look at this graph. This is from 2008 to pretty much the middle of 2021. Look at the trend between 2020 and 2021. House prices in Australia grew, sure, but property finance outpaced it by over 80%. This means that everyone entering the market by leveraging their maximum purchase price would have been a causal factor of the prices of property increasing significantly. I've been watching it happen firsthand, where I am an active buyer looking to purchase a property I can live in for the rest of my life. I'm going to auctions left, right, and center, and I have offered money. I've offered numbers well above my range, which I think are reasonable. And then I'm watching these properties go for $200,000 to $300,000 more. And 2 to 5 years ago, I would have got the property for half the price they're going for. It is crazy watching how much money people are putting into these properties. And this is where, if mortgages weren't a thing, comes into play, where people would not be able to just bid numbers at the top of their range. They would be limited to how much they can offer on a property, which in theory would drive the value of house prices down. I have to defend the topic for a second as well, because I know mortgages have introduced many benefits to home buyers and given people the ability to get a roof over their head. It's brought people out of poverty definitely since the 1930s through the Great Depression. It absolutely has helped people. It's just that I believe banks are taking advantage of this system by optimizing it without heavy regulations, and they're able to lend reckless amounts of money to people who do not understand what they're signing in a lot of circumstances. They don't understand enough about the topic and they're getting caught out, and this is only the very beginning. I don't want to spread FUD. I don't want to sound sad and depressing and make this all about, oh, the world's going to crumble, it's going to collapse. I'm not someone who's preaching that. I'm just aware because the people in my own life don't really have an idea about the intricacies of how mortgages work and lending. And I think at the end of the day, people look at it at a convenience point of view. They go, oh, I can live in my own home, no problems. I don't care if I have to pay this mortgage for 40 years of my life. But when you really calculate and look at the numbers, it is an insane amount of the money that they're going to earn over their lives that they're going to put into these assets. I'll leave the topic and discussion of the benefits that a mortgage provides for another video as well. I think it's something I might come back to and discuss in the future. I will put one in there though. For most people, home represents freedom. It's something that you can care about, it's yours. And from a financial perspective, it is a healthy wealth builder, or has been for the last century. It is absolutely a fantastic thing. It is just so important that you understand your limits and that you do not bite off more than you can chew, because bad things do happen. And if you're not prepared for them, you are going to get caught out. It's also scary to think that if the trajectory of house prices continues in the upwards trend that it's on now, we might actually see the introduction of lengthier payback periods, something I've seen flown down in different news articles, which is the 50-year mortgage. Might actually come into play, like I said, if these prices and trends continue. And I just wanted to throw that in there as well, because the way banks optimize these loans and mortgages and lobby to get these policies put into place, which is favorable to them, is going to obviously continue into the future for as long as possible. They are predatory companies. Even though they offer services which are useful, they, at the end of the day, are there to make a profit and to maximize that profit, which means taking more money out of your pocket. So the answer to my question and the conclusion to this video is that banks are the winner, because house prices continue to soar, people continue to sign their lives away, where the new norm is that a percentage of your paycheck every week for a long period of your life, if not your entire life, goes to another establishment. It's like renting from a bank, essentially. Some people will never own their homes. So the bank, in my opinion, is the winner. With that being said, I hope you enjoyed today's video. I know it was a little bit different. It was a bit of a deep dive into a topic that I wanted to cover. I said I wanted to cover it, so I did it. I hope you enjoyed it. If you made this far, thank you so much for watching. Please hit that like and subscribe button down below. I really do appreciate the support, and I'll leave you there. Have a good day, have a good week, and as always, I will see you in the next one. Bye for now.